Hello, this is the TradeSite US Stocks and Futures Market Preview for Thursday, the 19th of September 2019 and Friday, the 20th. As usual, we don't typically do a market preview for Fridays as most of the week has played out. We didn't do one last night because we were had such a dead day on Tuesday. We had a dead day Wednesday too until the Fed announcement, and even then we closed pretty much even, so it didn't matter. But this will be it for the week in terms of announcements, and we'll get back to work over the weekend. We still have time. It's a triple expiration week, so Friday is triple expiration. That usually means a dull day, but we have not really seen enough of a move that I would call it an options unraveling move ahead of the triple expiration. The triple expiration unravelings are usually pretty big. So I'm still thinking there's something to do on Thursday. I think Thursday might be the more exciting trading day of the week, and we will see what happens. But let's go through the daily charts, then we'll look at the intraday action, and we'll talk about the economic data that's left for the week, which is really not a lot. Okay, so the ES, this is the S&P futures in daily chart form. This is the proper way to look at the market. We have sell signal, 13 sell signal back in July. We've never gotten low enough to fulfill that signal. We've been under the risk line of that signal, which is the pink line. We still are. Now, granted, at this point, you can say, well, you pulled that, you had a little drop in July, and that was maybe enough, a couple hundred points on the S&P to at least make that signal right. I'm sure anybody that took that signal took partials along the way and made money. But the reality is just this signal has not fulfilled itself. So let's just be aware we still have a fully actionable risk line, the pink line, and until we head lower and get a new 9-bar count to the downside or touch the static trend line, neither one's done. Let's look at the daily charts here. Crude oil up 15 cents to 58.26. Gold down 17.10 to 14.98. S&P cash index gains literally a point, which is really a boring day. And the NASDAQ 100 loses 0.23, so not even a point. So as flat as you can be, that's what I said on the day, that's what we were. The SOX gains 1.221. Sorry about that. The biotechs lose 27.33. Russell 2000 done 9.94. There were, if you look at it that way, more stocks down than up because the small caps and the biotechs are down, but the broad market's flat. We'll get through that in a minute. Here's the VIX. Down 49 cents to 13.95 by the close. The trend closes at 1.54. That's finally a high reading on the VIX. So the VIX is curling up here, but remember, we had that VIX reading that was under the 85 level, the 10-day moving average under the 0.85, and that is a sell signal on the broad market. So last time we got that, it took about 10, 12 days before the market rolled over. And we'll see what we get. Here's the NASDAQ volume up to 2 billion shares, which is still way less than normal. Advanced decline ratio on the NASDAQ, negative 550. So more stocks down than up for first time in a while. Negative 143 on the New York. Google gains $2.77. Apple up $2.07. Netflix loses 704, still above the risk line of that 13 buy signal. Amazon down 509. Tesla down $1.30, and Facebook up literally 6 cents, as flat as could be. The Goldman Sachs up $1.17 on lower interest rates. Remember, the Fed did cut interest rates by a quarter point. A lot of conversation about what that means and what they're about to do. Seems like there's one more baked in the cake, potentially by the numbers, but it's a 50-50, maybe I would say like a 60-40 proposition at this point in time. TLT, the 20-year bond ETF, up 59 cents. All right, in terms of intraday action, let's look at the 5-minute chart. So, remember, we've been stuck. Actually, let's look at the 10-minute chart just for a minute, just so you can see. We've been stuck in this horrible range, right? So this is Wednesday. So Monday, we gapped out. So Monday and Tuesday, it was as flat as can be, untradeable. You can't trade and make money in that environment. And we had pushed up in the last 15, 20 minutes on Tuesday, but then the gap down on Wednesday put us right back in that range. We spent the whole day there until the Fed announcement. The initial spike was down. The secondary move was down. The third move after the press conference was back up. We filled the gap and actually basically filled the gap. We did fill the gap from Friday's close. So right now we're exactly where we closed on Friday on the ES and basically the same on the NQs. I don't know if that means anything, but it is what it is. So what does that mean for what's left of the week? Thursday we had the Philly Fed Manufacturing Index, current account, and weekly initial and continuing jobless claims numbers an hour before the bell. We got the CB leading index 30 minutes before the bell. Oh, no, I'm sorry, at 10 a.m. Eastern time, 30 minutes into the market along with existing home sales. And we've got natty gas an hour in Friday. There is no data but it is triple expiration, which usually means nothing going on in the market as long as we get through all this other stuff before then. So it's a conflicting market right now. There's been a lot of nothing going on. You can see it in the daily chart here on the ES. Last 6 days have been dead flat under that risk line. We started to see some action back in late July and August, but it's come back to the highs and now not doing it. The one thing I keep trying to point out to people is if you look at the S&P 500 and you go to the monthly chart. Now remember, this is a big broad time frame. The monthly chart of the S&P, if we tick up here at all, we're going to get a 13 sell signal on the monthly. Now, we had one back in 2015, and we shook it off immediately. We broke the risk line and went higher. So you can say to yourself, why does another one matter when we shook off the last one? But here's the thing. What we have seen statistically is that when you have a chart that gets a 13 sell signal on any time frame and then ignores it and keeps going higher or lower, depending on the signal, either way, and then gets another one shortly after that based on the time frame of the chart, that one's usually way more meaningful. In other words, you can't usually shake off 2 in a row. So any close up here a week from Monday, which is the end of September, would lead to a 13 secret sell signal on the markets. Add that to the trend reading, add that to the inverted yield curve, add that to the Fed having to do some weird things they don't normally do to pump liquidity in the market, add that to the Fed lowering interest rates, and you can sit here and talk yourself into thinking that the economy's strong, but the reality is something doesn't look right going forward, does it? There's a lot of signals here that you don't see very often, and in conjunction, it's hard to believe they're not going to play out. So it may not be tomorrow, it may not be the rest of the week, but let's just keep an eye on all these things because I do feel like once it shakes loose, remember, some of the easiest money and the best money we ever made here at TradeSight was back in 2007 and 2008 as the market fell apart. And once you get that signal and start to go, it's a good time in the markets. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday and